What's going on, guys? So every single terminal here at the gates has BigBear.AI technology, facial scanning recognition on both sides. So we're gonna go into a video today analyzing the stock. Hopefully you guys enjoy. Now, investors were furious after BigBear.AI's earnings. The stock tanked, and we were live literally on YouTube as some calls cost us about $10,000 in losses. And people threw their frustration out at us here on YouTube. That's fine, I get it. But here's the reality. Long-term positions in Big Bear have more than doubled for us, and we're sitting on six figures in gains this year because we've stuck with the disruptive AI companies instead of panicking. As my wife and I were traveling to the airport to a quantum conference, we walked past Big Bear's scanners in action, and the company is definitely the real deal. And realize if you ever want to learn how to invest in AI companies, trade them with us every morning live. You can. Now's your chance. And by popular request, we reopened lifetime access to StockMate. It's on sale for a limited time. Click the second link in the description below and at least take a look. This morning, we were trading a space company that's actually partnered with Big Bear. It was RDW Redwire. We bought a dip there. It hasn't moved much at all. It's just $23 profit so far today. At one point, we were up over 100, but just hasn't moved. Let's get into Big Bear. Big Bear is up 2.3%. And we have the Fed meeting also happening where that's definitely going to impact markets if we see basis cuts hit. But what we got here is Big Bear is up 2.1%. They are above $6 a share, and we've been watching them looking for this reversal. They've continued to make this run from the 11th at $4.65, making higher highs and higher lows and breaking up above this $6 resistance that we were watching yesterday. We said this is the next level. They continue up above $6, then that's going to be their next level of support. So you can kind of see this uptrend. Previous resistance we saw back on maybe it was Wednesday or Thursday of last week, then acted as a support yesterday, and also today at market open we were between trading Redwire on the dip, which as I mentioned it hasn't moved much, or we were going to trade Big Bear AI, which was down about 5% at market open down here to this pullback. And that would have been about a 7% swing, which would have been excellent, but that's okay. We're trading what we're trading. Rigetti also pushed things further for us. We could see Rigetti's up about 110% in our total position there. So that's great. But ultimately, the resistance at $6 and breaking above it means that's the new level of support for Big Bear. Now, in its history, as we've seen it kind of make this run from December, we started covering it here. We entered our position back here in December. We started covering it back in October, actually around $1, but it surged by February up to $10 a share, basically. When it sold back down into April with the greater market and then started to recover from that $2.36 price point up into June, and then in the summer, when it peaked out at $9 a share, that's when you really start to see conversation heat up. Say, why are they going up? Why is the stock getting so much momentum? And then they sold down. They had their earnings, which we did see them sell down significantly there. And there was a few things we wanted to really cover right now. And the first thing is definitely as they've sold off, they're starting to now break above the 200-day moving average. Is starting to, you could see that green line there was acting as a resistance through August as it sold down from $7 down to or $6 down to 5 and then 4. It was really getting rejected. Then we saw it break back up, and now it's continuing to hold above that green line and looking more bullish, and that's where we're in it right now. So the reason why, and why do we see the movement? It's got to be the government pursuing more of this homeland security ahead of the World Cup. You got the Olympics. You have a big, beautiful bill that gets passed, and you got more spending on TSA, more spending on the ports and everything else. You could see the TSA contracts, and really that's where they have the deal maker here. Kevin McAleenan of their CEO, deal maker. The reality is he was previously acting Secretary of U.S. Department of Homeland Security, and commissioners. So they're getting more deals there. They're deploying the very scan, as I mentioned. We saw at the airports, Denver, LAX. They're also at Chicago. They're at JFK and many others. Now, right now, the number one question on investors' mind as we see them get back above $2 billion market cap, and you see Goldman Sachs double down with 2 million shares basically on Big Bear, is are we seeing this thing continue up into the $7 to $10 range? Are we going to see that? Well, couple levels to watch, and one thing to note about their financials. Everybody's saying, they're at a sell down. Next step is $2 a share, or what have you. I've heard it, and they were saying that basically after earnings, right? But there's a few reasons why you still see institutional scoop them up after earnings and buy. And the number one reason is going to be their financials. While they looked bad on paper, right? So they come in with a negative net income. Revenues only 30 to 50 million on average. They're kind of peaked out on revenue the last few years. Like they are increasing, but just about 2%. But they come in with this negative earnings, and this is the story where, again, we're live, we're looking at our screen. I remember sitting here and we were watching, and we said, okay, all right, this trade we're in is down $10,000. I remember we're looking at it, or 12,000. It was live on screen. And after that, we still have long-term positions in Schwab, and we're up much more. But I'll tell you, when we were looking at that and everybody's seeing this negative net income, most comments were, this is it, they're done. But there's a few things they missed. The best investors that I see inside of StockMate, for example, this is where you can see some of our followers. There's a lot of great investors, over 24. We're actually up to, I think, 27 now. Of these members have a net worth of over $1 million. And I joke, but literally the best insights I get are from investors here. And the engagement's small. You might see 5, 10 likes on the high end, on some of these posts. But I'm telling you, the insights are amazing. When we were looking at some of the insights from, I think it was Michael Clark here, he came out with this great article inside of StockMate, and there's also some good ones from Lee. Lee actually pointed out some of the things from Big Bear around the Olympics and how they were focused on getting ready for the Olympics. Lee actually brought forward this post on LinkedIn to our attention a while back. When we're looking at this and we're seeing this down, you look at Michael Clark. He had this nice article that came out a while ago, and this is his alternative perspective. And this was actually one of the better posts, 7 likes, right? Pretty cool. But one of the things that he talked about here is that the losses that they showed on their balance sheet, those losses, that 200 million we were looking at a second ago, part of it, all right, goodwill impairment, an accounting write-down of value from past acquisitions. It's a one-time charge and doesn't touch cash, though it does show the asset is valued lower now than originally thought. Then derivative liability valuation. This is an accounting adjustment to the value of warrants, options the company issued. This moves the share price. In this quarter's case, it swung heavily negative. Again, it's a paper loss, not actual cash leaving the business. Now, when he brought this up, I thought interesting, because what he said was, so their actual loss was around negative 10 million, not negative 228 million. When you look on paper, it looked like a negative 228 million. You're good. I'll pause. No, go fast though.
You the one that paid me.
Got it. So he basically said if they stripped those out, they actually had an EPS not that was negative 71 cents, but was negative 0.08, so negative 8 cents, which is only 2 cents worse than the estimates. So what does that mean? Well, that means that these financials, but if you look at their balance sheet, they increased their total assets to 600 million. So actually came in with more cash in the last earnings. So why is that important? Well, when we're looking at them now and we see this move play out, we're basically looking at them and saying, hey, are we going to see them price in for more into that $7 to $10 range? Because if that's the case, and then they come in with 50 million in a quarter or what have you because their backlog's already pretty large, then we see them as a $7 to $10 stock. So that's why we're seeing them surge. The market value surge. They went up, 20% yesterday or what have you. So that's what's going on there. And when you look at their focus with the Veriscan, the technology there, it's really just the tip of the iceberg. The other thing they're doing is the Panama Canal. They're working in that area, which is what the U.S. needs, and that's why they're partnered. I think with they have the Department of Defense, they have the Homeland Security or the Pentagon contracts because of those reasons. Now, can it go down more? Could we see it get rejected? We could. Next level of support is at $6 a share, which it's barely holding. We'll see. If it sells down, we could see something similar to what we saw today, this morning, down to this $5.50 range. But overall uptrend looks good as of now, which is where we'll be focusing into the end of this week. So again, if you are watching BigBear.AI, short term, be ready for volatility. Long term, we continue to add. It's been a nice play, but it is an AI company in an AI boom, and that's why we cover it. So guys, if I earned your thumbs up, hit the like button. If you want to tune on into our daily live trading sessions, we'll be there tomorrow at market open. It's early. You got to get up early if you want to be there. But we did reintroduce or reopen lifetime access. If you missed it and you didn't want to get a subscription earlier and you want lifetime access, you could be there Monday through Friday. And all you have to do, simply take a look. It's the second link in the description down below. Thanks so much for joining, and I'll see you in the next video. Take care.